But one farmer says, seems to me there was a tea party in Boston that was illegal too.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold.
We shall seek to establish and maintain a dollar which will not change its purchasing and debt-paying power during the succeeding generation.
As anguished shrieks rose up from the floor of the New York Stock Exchange.
Government credit and government currency are really one and the same thing. A reserve of gold and a small reserve of silver.
Why do central banks hold it?
Well, it's a form of reserves.
Why don't they hold diamonds?
Well, it's tradition, long-term tradition.
Well, some people still think it's money.
Kyle, can you talk a little bit about gold and why at UTIMCO? Why at UTIMCO you actually took delivery of the actual gold?
So I'll give you my opinion. I won't speak on behalf of UTIMCO.
Sure.
So my opinion is very simple. As a fiduciary, which I am in that position, to the extent that you own gold and you are going to own it for a long time, it's not a trade. It costs us about 90 basis points a year to roll it through financial futures contracts. And then we went and looked at the COMEX. So the COMEX at the time had about $80 billion of open interest between futures and futures options. And in the warehouse, they had 2.7 billion of deliverables. So 80 billion of open interest, 2.7 billion of deliverables. We're going to own it a long time. You're on the board. You're a fiduciary. What do you do? Like, that's an easy one. You go get it. All right. So you go take $1 billion of the 2.7 billion and let them worry about the rest. And when I talked to the head of deliveries for COMEX NYMEX, I said, well, what if like 4% of the people want delivery? He says, oh, Kyle, that never happens. We rarely ever get a 1% delivery. So, and I said, well, what if it does happen? And he says, well, price will solve everything. I said, thanks, give me the gold. And then what was interesting was we conducted an audit of the delivery. And what was interesting in the audit was they kind of resisted our audit request on the front end. And then they finally allowed us in. And we did a random audit we had like 1,600 bars or something like that. And we just wanted to see 20 or 30 of them. And they were all over the place in different venues in the vault that weren't segregated. So yeah, it's an interesting concept. But what I'm saying is the exchange is a fractional reserve exchange, and they think price will solve everything. So that was the decision. It's actually an easy decision if you're a fiduciary.
Hey, good evening, and welcome back to a regular episode of the Junius Maltby channel, complete with introduction and everything. I hope you enjoyed that piece by Kyle Bass that was sent to us by one of you. As always, I appreciate those operating in the field reporters, gathering intel and submitting it for featuring on videos. I don't always get to all of it, but when I do, and it's a piece such as that, it is featured. Did you get what he was saying there about when you have to go get it? Go and get your gold. Of course, he's talking about billions of dollars worth managing a fund, but it was a pretty obvious decision for Mr. Kyle Bass to take physical possession of his precious metals from the COMEX and the NYMEX. And I hope you even watch that piece a second time if you have to just get the material that he's talking about. The content of that short clip is invaluable to those of you involved in precious metals, to realize that those that hold the paper contracts on metals operate under the assumption that no more than 1% will ever claim it and ever demand physical delivery. And they just say, oh, price will solve everything. Meaning that if demand were to be for the physical to be delivered and the price began to skyrocket, well, then they would sell their contracts, I'm assuming is what they're guessing they would do. His point is they don't have the gold in their vaults to meet physical delivery, which to me is criminal in a sense to be able to sell contracts. But we've talked about paper gold versus physical gold for some time now. You know my feelings. All of you, I think, share the same feelings. Tonight we're going to have some fun. Not a whole lot of real critical news. Being a weekend, gold's close. We already talked about it yesterday, hitting that $1,994 mark. I've seen other quotes on what it closed at. Again, there's It's all over the place. Different places quote different things, but it's in that range. We're right under 2,000. It's likely going to kiss or hit that 2,000 and breach it sometime soon. So when we talk about, and when we're on the verge of what's really a historical benchmark for precious metals as priced in fiat, in currency, in monopoly coupons, the things that the statists issue, these little fake promissory notes, it's very important to look back at other times in history that it's done so and realize that every time there's the naysayers saying, oh, this is it. It can't go any higher than this. Don't get involved. Don't even dip your toe in it. Run away from it. Gold's not a good idea. And the hit pieces start coming out from those that are of a bearish position or those that don't like gold for their own purposes. And we talked about that a little bit yesterday. Again, I do view gold kind of as an ideological battlefield when it comes to monetary theory and economics. People are very zealous in their opinions and positions on gold. And I myself am, being whatever you want to call me, a gold hawk, a gold bug. And the people that are opposed to gold are often opposed to it for bizarre reasons. And sometimes it's based on, I would say, prejudices and conditions that they've grown accustomed to just in their own life. You could say the normalcy bias, because certain events have never happened or they've never experienced them. They don't think they can. They don't see gold's role or purpose, and therefore they have nothing to do with it. And we're just going to touch on a couple of those, and we'll elaborate, and then we'll go into some charts. And as usual, you'll just be sitting here on the Junius Maltby channel, experiencing the extemporaneous ramblings of a madman here on the most boring channel on YouTube. Gold hits an all-time high, but Warren Buffett doesn't buy it. Should you? As if everyone out there should be doing the exact same thing and have the exact same investment strategy because they live an identical life and they live in the same region, the same countries, and everything they do is exactly the same as Mr. Buffett. Heck, they were born on the same day. No, that's not the case. Everyone's different. We live in different timelines, different parts of history. If you're 15 or 20 or 30 years old, you're going to be living in this world, I'm assuming, a little bit longer than Mr. Buffett. He was born at a unique time in American history where if you placed stocks on a wall, hundreds of them, and just randomly threw darts while blindfolded and purchased those stock positions and kept them, you would likely have seen significant gains over time. He was an outlier. I'm not taking anything away from him. Yes, he made some brilliant decisions buying a railroad just prior to a major oil boom so that he could ship the oil to the coastlines. He's made some great strategic moves in managing wealth in a time period that was very easy for him to do so, but also he took advantage of it. He saw options and choices and made the right ones, and it worked. But times do change. Not everything stays the same, and things have shifted over time even while he's been investing. And I'm sure he's made some significant mistakes. He would probably admit that he has. His avoidance of gold I would consider to be a mistake. I mean, he's missed out on some tremendous wealth preservation over time, and he could have hedged some significant losses if he had taken gold positions in the past. Even if he had taken paper gold positions just to shield himself from certain market declines. I also find it hard to believe that no portion of any of his funds that he runs, or any of his investments, are tied to gold at all, even gold mining perhaps. But I don't know. I've never really dug that deep into Mr. Buffett's decisions when it comes to that. I'm taking his word for it when he does these interviews. And of course, the timing of these interviews is critical. And you would expect that this is what the media does when gold starts to do its thing. They go out and try to get those contrarian views towards gold, and those that are anti-gold start to become a little more vocal and get on the stage. So the key points of this article, we'll kind of chip away at it. First one, gold settled at a price of $19.44 an ounce on Tuesday. This is a little bit of a dated article, and is trading at a level not seen since gold began trading on the CME in 1974. Hedging against inflation or market uncertainty and investment diversification are among reasons people invest in gold. I think they could include some other reasons in there as far as like not just inflation, but hyperinflation or massive currency debasement, or let's talk about maybe a global economic reset or a paradigm shift. Who knows, whatever you want to call it there. Warren Buffett has always said gold is a bad investment, a shiny cube that does not generate earnings or pay a dividend like a stock or interest like a bond. No, Mr. Buffett, it doesn't. It's because it is money. It is real money. It's interesting that Karl Marx himself, again, you know I'm very anti-communist. I hate socialism, collectivism, Marxism, communism. I hate it. Some of you get a little excited or upset if I tend to mention Karl Marx or quote him. But we did read through some of Marx's views on gold, and he is in much agreement with you and I as far as gold's role as money. It is the ultimate settlement of account, the ultimate eliminator of debt. It is money. Everything ultimately gets settled in gold. Whether you want to believe it or not, that's the way wealth and the flow of money in the global economy tends to work out. If you don't believe me, just look at the central banks who have 19% of the above ground gold in vault storage. That says a lot right there. I just find it interesting that a titan of capitalism, Warren Buffett, has a lesser understanding of the role of gold and its value than the founder of communism. You wouldn't think that would be the case, now would you? Now, one of the excerpts from this article reads, quote, "That depends a lot on how you view the world and on how you view gold. What are you buying it for? Because you love its physical beauty? As an investment? As protection against uncertainty?" Pretty vague and open-ended questions there. And I'm not in agreement that those are the most valid questions one would ask on why you buy gold or why you don't buy gold. I think most of you purchase precious metals, gold and silver, because you have a more solid understanding of monetary theory, history. History is a big one. The history of economics, the history of fiat currencies, the history of governments, what they do to their currencies, the monies that they issue. Whether it's the Roman Empire or any of the nations that followed that ultimately diluted their currency to the point of destruction, destroying the economy, destroying commerce, destroying savings, and ultimately destroying the empire or nation itself as a result of the decay. The reason people are buying precious metals, and I did a video on this a long time ago, I haven't watched it and reviewed the content, so I don't exactly recall what's in it, but it was titled The Ideology of Saving Precious Metals, or The Ideology of Gold Ownership. I believe that was the title, something like that. It's because I truly believe that the reason people purchase gold, many of the people, I would say many of you, is not because of, especially, the beauty has nothing to do with it, unless you're like in India and it's for a wedding. But again, I would argue that the people in India know the true value of gold. That's why they are the largest owners of gold outside of a central bank. Collectively, the people of India hold the most gold as a non-banking entity, if you grouped them all up. But I don't think the beauty of it is anything, unless it's like, jewelry, for example. When we're talking about bullion here, we're talking about gold coins, gold bars. All right, you don't take your kilo bar out every single day and look at it and admire the beauty of it. Some of you might. But that's not the reason that you're holding a kilo bar of gold. It's definitely not the reason you spent that amount of fiat, that amount of labor and effort, that amount of your wealth that you stored up in what Warren Buffett describes as a shiny rock, as others describe as an archaic or a barbarous relic. No, you did it for ideological reasons. You're owning gold because you're revolting against a system. You're rebelling against the fiat empire. You're hiding your wealth away. You're removing your wealth, your labor, the store of your labor, from the greedy hands of the fiat empire, the bankers, those of the fractional reserve banking system that try to reach into your pocket and steal your wealth through the hidden tax of inflation. That's one of the main reasons. You're trying to avoid currency debasement, inflation, hyperinflation, a reset where they just take all of the money out of your account and issue a new currency. You're trying to store your labor over time and prevent others from meddling with it. Because that's ultimately what the gold is. It's a representation of your work, your time, your efforts, your diligence, all the things that you've done, that caloric output, whatever it may be, whatever your occupation, your trade, your skill set, whatever you offer and give to humanity, to society, to civilization, that gold is the fundamental stopping point and end game of that labor, where your compensation, where you put it. And you can unlock it, unleash it, and release it later on for goods and services or what have you. That's the fundamental ideology that I think many of us inherently have inside of us when it comes to how we view gold ownership. It's not because the investment part of it, yeah, there's some people that do it for that reason. And those are the people that they don't understand anything. You know, they would buy stock in bowling balls if the chart looked good and they were timing it and they saw a bull flag and there was a new reality TV show about bowling, and all of a sudden bowling was this big, huge, explosive sport in the United States, and there was a TV show on it. It was in the Olympics, and now there's the Super Bowl of bowling and everyone's watching that. Yeah, there's some traders out there that would just buy stock based on that alone. That's how they do things. They might not know about it, they might not care about it, they might not even know what planet bowling balls are mined on. But they buy stock in bowling balls because it's the thing to do. There are those types of investors. They're just chasing the next best thing. They'll buy whatever it is they see on the Kramer's show, Fast Money, or whatever CNBC's talking about that day. They're fad investors. They wear their little suits. They snort their coke. They run around on Wall Street. And that's what they do. And a lot of times they get a lot of free money from the Fed and they just pump it into whatever they want because there's no risk. So that does exist. That's your regular everyday investing crowd. You don't get free money from the Fed. And you're trying to do whatever you can to not lose a plug nickel. I mean, you want to be one of those people that has 4.5 cents of the first nickel they ever made. At the end of the day, you just want to be left alone, and you don't want to be left with nothing. So you buy gold. You buy silver. You know that they can't steal it. They can't take it. And you take physical possession, just like Kyle Bass there did with his 1,600 bars. They took delivery because they don't even trust the people that issue the paper coupons of paper gold. So that not only does he invest in gold, he invests in it physically and he takes delivery. Just like I've been arguing you should be doing all the while. If you're listening to this channel and you have any exposure to ETF or paper gold, the first thing you should do Monday morning is sell those positions and convert it into physical. Period. I really don't want any viewers of the Junius Maltby channel holding paper gold. I just think it's antithetical to all the things that you and I talk about and believe. You know, and there's some people that do it for different reasons, you know, because they're playing on Robinhood or they're doing this or that, but and I'm not going to be so zealous. You know what I mean when I tell you, sell it on Monday and put it into physical. Obviously, you're going to do whatever you want. I can't tell you what to do. But it's just something that I hold true and inside, that I just think that the paper gold market is that corrupt that we really should have nothing to do with it. And it should be dismantled. Especially if it's as fractional reserve as Mr. Kyle Bass pointed out in the beginning of this video. So here's a list they continue on with on reasons people buy gold. We'll break it down a little bit as well. Gold can be bought for many reasons. Here are 5 of the main ones. I don't know where they did this poll. I was never called. Doesn't sound like it was very thorough research, but these are the 5 main reasons, supposedly. As a store of value, gold can be traded and stored for future use. About 40% of gold production goes into direct physical investment in gold, bullion, or coins. That's a pretty good first reason, and I think it goes along with a lot of what we talked about as far as the ideology of holding precious metals, the ideology of buying gold as a store of value, because it's really truly what it is, a store of value because it's money. So yes, that's good. For jewelry, again, I'll agree with that. There's a lot of it. India, the United States, jewelry's been a big thing since the beginning of time. I wouldn't doubt if Cro-Magnon man had some jewelry at some point somewhere in his little city-state of Catalhook. About 50% of gold production goes into jewelry. In many countries, such as India, as we mentioned, gold in the form of jewelry is often a very large part of a household's net worth. Again, they do hold a significant amount of their gold in the form of jewelry. Number 3, as a hedge against inflation. Again, I will agree with this, and I like this as number 3. However, I would put it above jewelry because I don't own any gold jewelry, and it serves really no use for me. When inflation rises rapidly, investors often turn to gold. The key is you should probably turn to the gold before inflation rises rapidly. Otherwise, you're going to be a little late to the game. And as I've said before, when the music stops, you don't want to be left without a chair because it can get to a point where no amount of the fiat currency you're trying to exchange for the gold will be accepted because it's completely worthless. And again, this is only talking about inflation. Now, when you talk about inflation with the investment crowd, the Wall Street boys, and your average run-of-the-mill window-licking booger eater, they don't understand truly what you or I are talking about. They look at inflation as whatever the government numbers are, the CPI and such like that. They think it's 2 or 3%, that's it, never goes higher than that. And the Fed, of course, has it under control. It'll never go high, it'll never run away, we'll never see hyperinflation. That only happens in countries with like brown people or Eastern Europe, Soviet bloc, Balkan states and such. It doesn't happen to Western countries like us. That can't happen in America. I mean, we have NASCAR, for crying out loud. You can't have hyperinflation in NASCAR. You can't have hyperinflation in England. I mean, the nation that produced the Beatles, heaven forbid they have hyperinflation. Or anywhere in the Euro. The Eurozone can't have it. I mean, it's predominantly run by white people, and white people just don't do hyperinflation, right? Of course that's not true. It's wrong. To think that there's some form of ethnic privilege that goes with defying the laws of economics, to me is, well, it's systemic, I don't know, something. No, it absolutely can happen. And the rules of economics are not racist. No, they're absolutely blind. It's kind of like justice. We need a statue, and it's like this deity that represents economic law. And they too are blindfolded, and they wield a sword, and that sword is hyperinflation. And they will cut you down and chop your economy up if you disobey them. Sometimes it takes a while. They'll appease them or stave off the wrath of the hyperinflation deity, but it will come. It's a demon that rears its ugly head from time to time throughout history, and it always gets its vengeance and its wrath at some point. So inflation, it's a reason to buy gold. Hyperinflation, definitely, and you should probably be a little bit ahead of the game and see it in the future. They don't warn you. You're not going to see a headline that tells you it's coming tomorrow or the next day. Governments don't typically announce the arrival of a hyperinflationary event. There's certain people on the inside that might know that it's coming, but it's not something that you're going to be too privy to. So you're going to have to look for the signs of that on your own, and it should be its own little number on this list. But again, you're a tinfoil hat wearing weirdo if you talk about it or believe it, because of course many of these talking heads, many of those you see featured on the media or in articles such as this, they're going to deny that it could ever occur and there's any possibility of it occurring in the United States or any of our partners in the global economy. So they'll never list it as a reason. You'll never even see it mentioned or discussed. Number 4 is, as a hedge against uncertainty, investors often flee to gold during times of crisis, whether it is financial or geopolitical. You guys know the reasons for that. Of course, they're hedging in case the markets deteriorate, and they want to stave off their losses, so they sit in gold because it's often and typically more stable, and it might not see the downside risks that equities might show or other things like bonds and such. This is especially true in times of war, or when confidence in a government is low. Yes. For diversification. Now, diversification, that could fit into literally number 4, number 3, and number 1. any of those. So it doesn't really make the list for me as a number 5, but gold is often considered to be an asset class separate from stocks, bonds, and other commodities, of course, and therefore often used to diversify risk, since it is often not correlated with the movement of other asset classes. So again, I don't see number 5 as being its own. I kind of see that mindset and the idea behind it could be plugged into some of the other on the list here. Reasons to doubt gold's value. Despite its many attractive qualities, it's not obvious that everyone should own gold. It has been a fairly poor performer against stocks and even bonds over the last several decades. One study found that from 1972 to 2013, stocks outperformed gold whether rates were rising or falling or flat. One study found that? What study was that? Well, interesting. That you would think that it wouldn't have to have a study because it would be math. There's numbers involved. You could actually come up with statistics and data that would show you exactly whether or not stocks outperformed gold. We'll take a look at that here in a moment. It also has not proved to be a very good hedge against inflation. Well, that's because it's fuzzy numbers and manipulated by the state. They don't release the real inflation. And of course, they're just holding it down like a beach ball underwater. And we don't have to worry about it. Gold will do its thing. And we're seeing that take place now. It's going to expose the lies and that the king has no clothes. Another problem with gold, it doesn't do anything. This is Warren Buffett's big beef with gold. It is an unproductive asset. Unlike stocks, it doesn't throw off earnings in the future that you can lay claim to. And it doesn't pay a dividend. Unlike bonds, it doesn't pay interest. It just sits there. And it costs money to store it, even if you own an ETF. It doesn't cost anything to store it, as a matter of fact. It doesn't cost a plug nickel. You saw Kyle Bass, how he solved that problem. He said it was costing us 90 basis points a year to store the gold, so we took delivery of it, and now we have our own physical gold. And by the way, we didn't trust those that were holding it because they don't have as much gold as they have out on paper. But that's not the point of this now, is it? The big problem with it is it doesn't do anything. Well, it depends on what your definition of anything is. If you're looking at preserving your wealth over time, as we've seen in previous charts and performance graphs, as compared to the decline of various currencies around the globe, does quite well at that anything. I don't care if it doesn't pay earnings or interest. I don't need it to. The interest in most accounts doesn't keep up with the rate of inflation. That's eroding and decaying all currencies. And I really don't like bonds. We've seen what happens to them. All of those have a certain part of risk to them, don't they? Bonds can go to zero. Equities can go to zero. All of those can be wiped out, erased, and you can lose every penny. Some people can't afford that. They don't want to lose anything. They don't want to lose a penny. They don't want to lose their wealth, their nest egg, their hard-earned labor. So if there's one anything that gold does extremely well, is it never goes to zero. And it might just be the only thing on this planet that never has, never can, and never will go to zero. And that type of guarantee, that type of insurance, is what some people want. Peace of mind. So I would say that the one anything gold does is it offers a significant peace of mind. No one has to lay in bed at night wondering if the kilo bars of gold hidden away somewhere on their property or under their bed or in their vault, or like in that video I did on the many places people can hide their gold, in their plumbing pipes, in their septic tank, in a big bag covered with feces. It doesn't really matter. They can sleep well at night knowing that their wealth and the store of their labor isn't going anywhere, and they'll likely perish before anyone can take it away from them or take its value from them. Yes, it just sits there, because that's what it does. It just sits there like it has for 10,000 years, just holding value, preserving purchasing power, just doing what it does. That's the whole point, Mr. Buffett. It just sits there, and it doesn't cost any money to store, because we don't hold ETFs, and we don't pay people to hold it. Now we sit there with our own weapons, and we defend it ourselves. Some people, you just got to break it down for them, I guess. Many of you have been patient throughout this rambling rant here on the Junius Maltby channel, and I appreciate those of you who have stuck around this far. We're almost done, I promise you. If you've gone to sleep already, have good dreams. This is the last article. It's $2,000 an ounce, but should you join the gold rush? Asks Toby Walney. Now remember, there were articles identical to this. You can just switch the number. It could say, it's $1,000 an ounce, but should you buy in now? Should you join it? Should you buy gold at $1,000 an ounce? Now that was $1,000 ago. And remember, it never ever went back below it again. Even though these experts, those like Buffett, those that write these articles and criticize gold ownership, many of them stated that, well, it hit 1,000, it's done, it's going to go all the way back down to 200 now. It's over. That was it. It was an unexplained blip, and it just can't do that again. It's done. Well, guess what? We have hindsight now. We can go back in a time machine and tell them that's not going to be the case, but we don't have time travel yet. So we'll just have to sit here and say, I told you so. It never went below 1,000 again. Never even touched it. Never came close. Once it breached 1,000, it remained above it. So we're just going to skip to the very last line here in this little page, and I want you to read it. So is it too late to join in the gold rush? Most experts, I don't know who these experts are, but most of them think it has become risky to buy at the current price, even though it could go yet higher. Now, what kind of experts and what kind of financial advisors are those? They're telling you that it's risky. You should stay away from it. That it's probably going to go higher. I don't know who these people are. And the thing is, imagine how wrong they are. And imagine how wrong they can possibly be. If it breaches 2,000 and shoots to 3,000, to 4,000, to 5,000, at what point are they going to say, well, I guess you shouldn't have avoided it at 2,000. You can't rely on these people. You can't rely on these articles. You can't rely on me. I'm telling you, you got to do your own due diligence. Dig into the history. Dig into monetary theory, economics, all of it. All of it. Go into the archives of this channel. Read stuff that I read to you from other sources. Look up the history. Look up all of it. Look up the story of gold and its role in human existence. And make the decision for yourself. So is it too late? I don't think so. They're still taking fiat paper for it, and they're still printing that stuff off like there's no tomorrow. They're still shoveling $25 billion a day into the financial system, and it's not working. The debt's going up exponentially, trillion after trillion after trillion. It's going to be 40 trillion in a year or two. The whole economy's unraveling. So you tell me, if you look at the backdrop of what's going on, digest the news, run it through your little brain there, and you tell me what you think's going on and what you think the prognostication is for the future of gold. If you think 2,000 is where it's going to peak out at and retreat, then yeah, stay away from it. But when you look at the facts and you look at what's going on, if you think it's going to go past that by a long ways, and that currencies that we see around us today are going to suffer some significant consequences from what the governments and those who operate them have done, then you might want to take a position in gold. And you might want to take physical possession of it. We've seen the charts, the 30-year chart. We've seen how when they unleashed gold and allowed people to take possession of it and own it, it performed quite well. And over the years, currencies have been debased, and gold has held its value and risen in its value, denominated in all of the currencies of the world. So yes, it's of my position and my opinion that it's imperative to own gold. And the ideology of owning precious metals, to me, involves more sound logic, reason, and understanding than that of not owning it. It just seems like the right thing and the logical thing and the right move to make at this point in history. You make the decision for yourself. Thanks for tuning in to the Junius Maltby channel. If you liked this video, go ahead and hit the like button. That's that little thumbs up down below. If you're not subscribed and you somehow stumbled upon this video and were able to maintain viewing it for this duration of time, then you're in the right place. Hit the subscribe button and also the notifications so you can catch some of our lives. Thanks for tuning in, and a huge shout out and a thank you to all of the most ardent supporters and those who support this channel all the time. You guys are the best. Love each and every one of you. Take care. Have a good evening. And as always, thanks for tuning into the Junius Maltby channel.
To the extent that you own gold and you are going to own it for a long time, it's not a trade. It costs us about 90 basis points a year to roll it through financial futures contracts. And then we went and looked at the COMEX. So the COMEX at the time had about $80 billion of open interest between futures and futures options. And in the warehouse, they had 2.7 billion of deliverables. So 80 billion of open interest, 2.7 billion of deliverables. We're going to own it a long time. You're on the board. You're a fiduciary. What do you do? Like, that's an easy one. You go get it. Right? So you go take $1 billion of the 2.7 billion and let them worry about the rest. And when I talked to the head of deliveries for COMEX NYMEX, I said, well, what if like 4% of the people want delivery? He says, oh, Kyle, that never happens. We rarely ever get a 1% delivery. So, and I said, well, what if it does happen? And he says, well, price will solve everything. I said, thanks, give me the gold. And then what was interesting was we conducted an audit of the delivery. And what was interesting in the audit was they kind of resisted our audit request on the front end. And then they finally allowed us in. And we did a random audit we had like 1,600 bars or something like that. And we just wanted to see 20 or 30 of them. And they were all over the place in different venues in the vault that weren't segregated. So yeah, it's an interesting concept. But what I'm saying is the exchange is a fractional reserve exchange, and they think price will solve everything. So that was a decision. It's actually an easy decision if you're a fiduciary.